Well, good morning, traders, and welcome to the morning coffee kickoff. Trust everyone is having a good week so far. A couple of trading opportunities that we've picked up this week that we're going to go ahead and pay attention to. I know we've paid out on one trade this week, but we've got multiple positions in still from this week that have been added on. We've got Euro US dollar, we've got US dollar CAD, we've got we've got a bunch of pairs, right? We're going to go ahead and check out and see exactly how they moving this morning, and whether or not we're going to hold on to these positions over the weekend, or whether we're going to go ahead and close out. It's most probably going to be hold on to positions and carry it over the weekend. But we'll check it out and make sure that we are clear of exactly what we can anticipate. All right, traders, with that being said, good morning, everyone, and hope everyone is ready to rock and roll, got their cup of coffee. Remember, it is the morning coffee session. All right, now we're going to go ahead and address the markets. Let's go take a look at the fundamentals first before we go ahead and take a look at the technicals. All right, so let's go ahead and move to the fundamentals. And I got ahead and did a quick look this morning, and we did see that there was the core retail sales and the retail sales that came out this morning out in the US. The numbers came out as expected. They expected 0.3% for both numbers, and it came out 0.3%. So on the mark, except for the revised numbers came out a little lower. So a little negative on the dollar news this morning. Not a big hoo-ha, but it definitely is a little bit lower. All right. Okay. Now, also, very importantly, remember, traders, happy Valentine's Day today, right? For those that are celebrating, I had my 27-year anniversary yesterday, and so a double whammy for me. 27-year anniversary yesterday, and today Valentine's. So happy Valentine's to everyone. Hope everyone is having a fantastic day. All right, so let's go ahead and continue and take a look at the markets this morning, and we're going to go ahead and take a look right here. We've got the pound open up, but I want to go ahead and take a look and see what trades we do have opened up this morning. And here we go. All right. Let's see here. Joe, thank you very much. Joe says, congratulations. You bet, Joe. Thank you. Appreciate that. And here it is right here. We got EuroCAD. We got 3 trades in on the EuroCAD. All negative at the moment right now. We got Euro JPY. One of them at break even. The other one negative. We've got the Euro US dollar. We've got 3 positions in on the Euro US dollar. And 2 negative, 1 positive. Here's a positive one right here. And then US dollar CAD. That one currently is sitting in a positive number as well. We'll take a look at US dollar CAD. Now, my posting this morning is how far or how quick could we see the US dollar weaken? All right, how quickly can we see US dollar weakening? And well, let's go ahead and take a look at the details of exactly how the US dollar is set up so far this morning. I'm going to go to the daily time frame, swing it over to dollar index right here. And here we have dollar index set up right here. And as you can see right here, price had gone ahead and fallen, giving us a wave structure 1, 2, 3, 4, and 5. Now we're in the A, B, C correction. And I'm still wondering, I'm still wondering whether or not this is actually my wave structure right here. Let's go ahead and plot it right here. I'm still wondering if this is my A, all the way up here, A, B, C correction right here, and then I'm going to see a much further and deeper fall to the downside. I'm still questioning this right here, but I am going to go ahead and say we are in a correction move, and I am looking to sell right here at the top. All right, there's a whole bunch of reasons why dollar would be expected to fall south. So the question here is, how fast can it fall? Well, I don't quite know the answer to that. Don't know quite the answer to that. But what we can do is we can go ahead and look at the news and take a look and see what's coming up in the next upcoming weeks. And next week, as we go ahead and take a look next week, we do have, let's see here, we've got the FOMC meeting minutes coming out on Wednesday at 2 o'clock. We've got, let's see here, we've got the flash manufacturing, so not a whole bunch of data coming out next week. We got a bank holiday on the Monday. Let's see if that's going to create. We got President's Day on Monday. All right. Let's go ahead and see the following week as we head towards the end of the month. Here is the end of the month right here. We got dollar index, CB consumer confidence. So I'm not seeing anything out in the news that could possibly drive this a lot further down. Early in March, let's take a look at the data early March. Got non-farm payroll coming out towards the end of the first week of March. But other than that, not a lot of big market movers out in the news that could really move the dollar further down south. So whenever I see this type of setup right here, I could possibly start anticipating a flash news. Now, flash news, in my opinion, is not necessarily something like we've seen over the last. We've seen pound flash crash. We've seen JPY flash crash. I'm just really talking about a news flash on something, whether it be on trade war, be it on the presidential election. Could it be on Trump tweeting something? Could it be something else that the Democrats have found, found about Trump, or trying to create something around Trump? I don't know. There's certainly going to be a sell-off on the dollar. What news supports this? Well, we'll have to wait and see. But we definitely see in the technicals that dollar is going to look for a dip. So I'm definitely going to be bearish on the US dollar. Now that brings us to the two trades that we currently have, that we're holding right now, and it is this right here. We are holding the US dollar. All right, this is the euro US dollar right here. We're buying, which means we're anticipating weaker US dollar. Now we have seen the euro sell off over the last 48 hours, and we are expecting a weaker dollar. So this is going to help push euro bullish. Now, I'm not going to say that the euro is going to go long-term bullish, not yet, all right? But we definitely see that euro is expecting some sort of recovery. Now, same thing here on the US dollar CAD. I'm expecting weaker US dollar CAD, so that will go ahead and push this pair down south. We've already seen some bearish movement in the US dollar CAD over the last 24 hours. Let's go ahead and take a look at US dollar CAD this morning. And I want to go ahead and specifically take a look at where is our target set for this for that trade. And here it is right here. And I'm going to go ahead and compress the charts up here, and we can see that we have, not only do we have this weekly target right here, we also have a monthly target down here at 131.46. So price is expected to work its way back down, and I'm actually looking at the charts right here, and I'm noticing that we have a missed target here, we have a missed target right here, and we have a missed target down here. A lot of reasons why price would be pushing back south. Also, take a look at the trend. The trend has gone bearish. We're now trading below the last pivot point right here, which is creating a bearish sentiment. Also, you can see that my wave, which is called my wave rider right here in red, this red channel that you're seeing right here, price is now trading below that. And my blue line, which is my signal line, price is trading below that too. So we're certainly in a bearish environment, and on the 1 hour time frame. And if I go ahead and get all technical on you guys, then we're looking at our trend line also showing off right here, indicating that price wants to go ahead and dip further down south, and we'll be looking for price to move down to around about this downward channel right here, which looks like another 46 pips before it hits that level. Now we've got our target right about here, this is the target. I don't believe this is the target we're chasing after. Let's see, 3209. Let's double check and make sure. 3209. Yep, actually it is. There it is. 3209 is the target. So 3209 is the target we're chasing after, which is actually this one right here, not the one previously. There it is there. So we're expecting price to come down. So this is the reason why we should feel very confident about holding our short on the US dollar CAD. Because not only do we have a lot of confirmation with regards to the dollar index looking for a sell-off, but we're also seeing that the technicals here on the 1 hour time frame is indicating that a 46 pip drop right here is anticipated. It's part of the deal right here. This is what we're looking for. Now we've got a little bit of consolidation right here. As you can see, price holding up a little bit over here in this consolidation. And if we break out of consolidation, traders, you all know when we go into expansion phase, right? Expansion phase, we're expecting price to match up with the breakup based off the range. So we see here we've got about a 34 pip range right here. So we're expecting price to at least fall down. And hang on, look at that. Actually, it's around about 24 pips before we hit that target. I said something like 40, but it's actually around about 24 to 30 pips drop that we're expecting right here. So this right here, the range is 38 pips. So we can easily expect price to move down to this target and go ahead and close it out with profit. So we're going to let this one ride. We don't see the RSI in an oversold condition yet. So there's definitely room for the market to break out of this this contraction phase that we're in right now, and then head into that expansion phase that should see price breaking down to this target. So feel comfortable with your US dollar Canadian pair as price continues to fall to the downside. All right. Man, there's nothing better than a cup of coffee in the morning, isn't there? All right, so let's go ahead and take a look and see what else is going on right here, and see what else we've got left for trading opportunities as we continue to address the setup that we have right now. One thing we need to go ahead and confirm, and that is right about here. Let me just go ahead and mark this off. 80. There we go. The one thing we have to go ahead and confirm here is we do have it looks like the pound Aussie right here is an unhit target. It was pending. Let's just go ahead and verify whether or not we've still got that trade setting up right here. And I'm going to go to pound, there we go, pound Aussie dollar. Let's go ahead and take a look at this week's target. And this 2 week's target, I did call it low probability. There you can see right here, price did get to that target very easily. It wasn't a no-brainer right there. Price got to the target. We never got into an oversold condition, so it never offered us a trading opportunity to get in on this trade. So with that being said, let me change my lights here. My spotlights are flashing here, different colors. But so we got that set up right here. A hit target for the week. So we're going to go ahead and update the document. This document, by the way, traders. Oh, I need to start fixing this up right here. This document is available in the description. If you're wondering where you can get this document, it is in the description. You can go ahead and follow me along the way as you wish. Just go ahead and click onto the link below. And like I said, it's in the description. It is our tracking document. This is what we're going to do right here. We call it now a hit target for the week for the pound Aussie. So pending order is now going to be cancelled. No more pending order. No trade right here. And we are good to go. All right. So you can see there's only one trade. Aussie New Zealand dollar right here paid off with a sell at 92 pips. So we picked up 92 pips in that trade. And I'm actually hoping that the Aussie New Zealand dollar picks us up a buy trade next week, because if you actually go to the Aussie New Zealand dollar right here, you can see that price is working its way back down as a correction move. But we're expecting Aussie New Zealand dollar to continue its way back up north. So expecting some upside targets for next week, hopefully, and that'll be a sure thing for us to go ahead and look to trade. Now, let's get to what we currently are in, what trades we currently are in. And and that is the euro Canadian dollar. Let's address what we have right here. Now, traders, if you're wondering why I'm not looking at any other currency pair other than the ones we are trading, well, that's because we don't need to, right? That's the great thing about the strategy that we follow, is that it's going to identify what trades we have to pay attention to this week. A lot of traders, is one of the questions that come up quite often. What currency pairs do I take a look at? What time frame? And the strategy that we follow is very, very easy to be able to adjust accordingly to the time frames and, of course, the currency pairs that need to be focused on. So that's pretty cool right there. All right, so we're looking at the euro Canadian. Notice that we were in the expansion phase, contraction phase right here, and now we're moving into an expansion phase. We spoke about it. If you did not remember yesterday, we spoke about this level here at the 127 here. We said price had moved into a 5-wave structure right here. Wave 1, 2, 3, 4, and 5. Yes, if you're asking me and saying to me, big dog, but hang on, wait a minute. This is consolidation. Yes, it is consolidation, but we have moved from the higher consolidation and broken out to the south side of that consolidation in a 5-wave structure. So, hey, maybe I'm wrong. Maybe I'm wrong. But you know what? We've got support here at around about 143.67. And you can see right here, this EuroCAD is starting to show a little bit of support. All right. And so here at this level right here, price is starting to slow down. The momentum that we had over the last few days, in fact, we can call this probably a full week of, maybe a week and a half of trading right here. We had this huge sell-off right here, and now it's time for recovery. Now, if the recovery is only going to go up to 44.97 up here at the top, then so be it. We'll go ahead and watch out for that. Now, we have 3 trade positions in right here. We have 3 trades in right now, all right? And our break-even point is actually around about 144.97. Right at that old support now become resistance. So guess what, traders? If price holds at that support, we're expecting price to continue to fall south. And if that's the case, we're going to pick up a lot more positions. So the question here is, do we make a decision and get the heck out of Dodge when price hits resistance? Well, let's look at the downside. Let's go ahead and take a look at the worst case scenario. If price comes up to that resistance and then sells off, where can we anticipate price to go ahead and find another level of support before we start seeing another rally? Well, let's take a look and see what's going on here with the chart again. And I'm going to go to this pair right here. And you can see that we've already pointed out right here that we have a range target. What is the range target? Well, just like I showed you on the other currency pair, here is the break. Here's the range distance, 281 pips. So we're expecting price to break out 281 pips. This is the breakout right here, or at least the breakout level that we're anticipating this to be the range target right here. So we're expecting price to move down here. So if I'm entering on this trade every 72 pips, and I believe let me see here. I believe we're at break even on the one. Let me see here. Euro. Yeah, we're around about break even on the last entry point there. So I'm going to go ahead and do this. So if this is the break even point, and I'm looking at re-entering again, around about, let's see here, we've got so I'm probably going to pick up another 3 entry points. 1, 2, 3. Yeah. So I'll probably pick up another 3. So which means I'm going to be in around about total 6 positions on those before I see any sort of correction. The deal is this. When you look at re-entries on certain positions, a lot of traders get concerned about it, and the only thing that you need to be concerned about is if you don't have good equity management on your trades. So you have to manage your risks on each entry point to make sure that if the market is going to go further down below, that we are accommodating that and allowing us to re-enter again, but not putting ourselves into a position of overexposing ourselves. Now, everyone, listen here. Overexposing yourself or overexposing your trading account for everyone is going to be different. All right. But there are certain rules that we have to realize that is an acceptable level of exposure. What you don't want to do is you don't want to go ahead and risk 30% of your trading account. So which I mean go into a drawdown of 30-40% of your trading account, and then still have margin requirements taken off your balance and leaving you with a very small amount of left margin, right, or trading margin to be able to manage those positions. Because what it does is it takes away your buying power. All right, think about it this way: if you've got a $50,000 trading account and you've used up 45,000, and all you've got left now is $5,000 worth of trading equity, it really reduces your buying power. And buying power means that if you ever get to a point where the market's trading at a certain level where you really know that this is a good place to go ahead and start buying or selling a certain currency pair, if you don't have the equity to be able to do that, it's going to be pretty frustrating. All right, it's going to be really frustrating. So what I always like to advise traders on is that when looking at trading a certain currency pair and when you're using a cost averaging strategy like we are using, it's very important that you don't run up your equity. Not because you're going to be margin called. That is a factor, right? We don't want to get margin called, but also the factor that we want to make sure that we have enough buying power that if we do want to go ahead and start adding on to a position because we don't see it coming up to our target and we want to now get out of that trade and work that position out, we've got to have some buying power. We've got to have some equity left to be able to work that position out, get out of that position, and then start focusing on the ones that are doing pretty good. So that's the reason why buying power is important as a trader, whether you're doing a cost averaging strategy or whether you're trading based on just pure swings in the market. It doesn't really matter. Buying power is always important. All right. Hopefully that's been clear, and hopefully that is the message this Friday for everyone that does struggle with that issue. All right. All right. Let's go ahead and continue. So we see right here, we're going to run about another 200 pips down south before price maybe hits a very strong support level and a bounce off that. I'm okay. I don't have a lot of positions in right now. I'm okay. My money, the risk management that I've got on my positions is fine, and I should be good to go. Now, there's another way that I'm not going to follow, but I'm going to go ahead and point it out to those that that are going to consider this. There is another way that I could handle this position. First, number one, we've got 3 positions in right here. So this is my break-even point, as I mentioned. So which means that I've got a trade in here, and I've got a trade in around about here. All right. Now, what I could do is, if price moves up here to this level right here and starts working its way down, stop all buying until we get down to this level right here to give you enough buying power to add positions right here. Probably go ahead and let's say we take all these lot sizes that we have right here. And whatever those lot sizes, let's say 10 lot sizes right here, we'll then go ahead and add 10 lot sizes right here, bringing up your break-even point to about this level right here. And then as price goes back up to retest, and it's going to do that, retest the downward trend line, then you've got a lot more equity and profit on this position right here. So you can apply this sort of rule. This would be more of a manual approach to it because my system currently right now is trading these positions for me, is entering my positions for me. So I would have to go ahead and move into a manual trading approach rather than using a trading system. All right. Craig says, good coffee, a good mentor for this good analysis. Did you say mentor or metaphor? Okay, metaphor, my bad. Sorry. The chat is a little bit further away from me. I not be able to read it too well. So, yeah, great. Thank you. Appreciate that, Craig. All right. Let's go ahead and take a look and see. Now, that's the case scenario. All right. This is the worst case scenario that we could expect here on the Euro Canadian dollar. Best case scenario, price moves up, takes retests that support level, that's now becoming resistance, and trades through that, and then we see a price moving back into the channel. All right, and then clearly we're going to go ahead and see our target hit for the for that trade. So that's going to be the next case scenario. Let's go ahead and take a look and see Euro JPY. And here is the Euro JPY right here. And sometimes traders, sometimes we overanalyze the market. Sometimes we put too much information that we don't really need to do. Now, I try and keep my analysis, especially when I look at the larger directional bias, I try to keep it as simple as possible, right? Keep it as simple as possible. You know, because when you add too many things on, you know, funny story, give it, how many years ago was that? I'm trying to think now. Back in 98. Yeah. Look, I have to really think about how far back this was, but yeah, it was in 1998, around about there, give or take a few. Funny story, when I first started trading, I was introduced to indicators, and when I started trading, I thought to have the best trading opportunity, to have the best signals, you have to have as many indicators confirming your signal. In fact, I used to do some training as well, and I always used to tell the students, because I was fairly new at trading as well, and I used to educate students, and what I used to say to them is, hey, if you can get as much confirmation, you know you got a good trade. So if you got 5 confirmations, it's better than having 2. What bull is that? All right. Sorry for those traders that I mentored back in 1998. I'm so sorry that I was so ignorant to trading. All right, because the fact of the matter is, the more indicators you have on your chart, the more conflicting it is, and the less opportunities that you are going to get yourself into. Now, I understand you need confirmation. I get that. The more confirmation you have that are aligning with each other does send a nice message. But the problem here is, traders, is that indicators are lagging. All right, well, let's put it this way. I'm going to reframe that question. Most indicators, all right, you might say, well, big dog, my indicator's not lagging, but most indicators are lagging. And if indicators are lagging, then if you're using 5 indicators or more, all right, then what's happening is you're really getting in late on the trade. So when I look at my setup right here, and I look at the way I look at the market, I try and keep it as simple as possible, with simple trend lines confirming support and resistance. Because trust me, traders, if you're using support and resistance to be able to trade, you are going to be getting in at the tops and bottoms of most of the move. Especially if you use the directional bias as your use trend lines as your directional bias, and at those levels you're making trading decisions at. All right, not waiting for huge confirmations, waiting for 5 indicators to confirm in the same direction. That's not really what's going to help you make money. So keep it simple, keep it real, and hopefully that will go ahead and get you into trades a lot quicker. So yeah, certain things that you learn over the years. Man, I tell you something. I always look back at those days, and I'm like, what was I thinking? And well, you know what? We all learn. We all start educating ourselves at some point, right? So here we go. So we've got the Euro JPY setting up right here, and you can see that the Euro JPY is starting to work its way back down south right here. We're starting to see a little bit of bullishness this morning. You can see JPY strengthened a little bit, but we've got a lot of strength out of the Euro over the last 24 hours. So regardless of what happened 48 hours ago, we are getting a little bit of recovery on the Euro this last 24 hours. And if I take a look over here, I see I got a little fib going here. If you take a look at this fib right here, we broke out of the lows of this fib, coming off a 127, 382 right here, and price went to the 127. We spoke about it yesterday. We said there's 2 things that'll push price back up again. One, bears that scored a point. So bears that scored a point, and we have gone to the 127 off a 382 retracement. So if price does work its way back up, we may go ahead and see price coming into a deeper correction move, taking out the previous wave high, and then going ahead and working its way back down south toward the target down here. So the worst case scenario on the Euro JPY for us would be that price continues to work its way back down to the 1.618 extension. That'll be our worst case scenario. Our best case scenario is that we're going to go ahead and obviously retrace back to that wave high, take out the wave high, get into a deeper correction move, and then go ahead and see price falling south, which means that traders, we're probably going to see an adjusted trend line, right? And that's what it really boils down to right there. So we're going to see an adjusted trend on this. All right, and that pretty much wraps up the Euro JPY. So the Euro JPY, we're certainly going to hold over the weekend. We are seeing a little bit of recovery right here. If you look at our positions over here, we've seen that one of the positions are in the money a little bit, slightly in the money. The second position we have right here is obviously in the negative. So we're looking for price to move back up. Now, if it goes ahead and dips further down south, then we're looking at, let's see here, we'll probably pick up another 2 positions on this, 2, maximum 3. So we'll probably be in 2 or 3 positions on this as price starting to work its way back down. Now, excuse me, Karen's pointed out that we've got a big crown on this setup right here as well. And yes, it is. We've got actually a couple of crowns on this. The one that I'm more focused on right here is the one that took out the low. And this is the one right here. If I go ahead and point out the crown, this is the crown that I'm more interested in, or the levels of the crown that I'm interested right here. And this looks like this. So yes, if it does move back up and it completes this move right here, this is what we're looking for. So this is the good reason, or one of the better reasons why we could anticipate price to want to come back up to this level right here. And notice how it is just above the previous wave high, and that's what we're looking at as a correction move into a deeper ABCD move, and looking for price to come back to that level before heading back down south. So yes, Karen, well spotted, and yes, you're right on the money. Okay, so that's it right there. All right, well, that's the Euro JPY, and I believe that is the pairs. I think we still need to look at the Euro US dollar. Let's take a look right here. And Euro US dollar is taking out the lows down here. The one thing that is important for us right here, traders, is to see whether or not price can go ahead and trade back inside this consolidation right here. So we have just recently gone ahead and created a wave structure right here. Price has gone to a 382. We've gone all the way down to the 1.618. So we are expecting a correction move, and the correction move could take us up to this level right here to retest that level, and then we may stay inside consolidation. You know, we may see support there and price go back up here. And the reason why I'm saying that is because, once again, I'm expecting weaker dollar. And if I'm expecting weaker dollar, then this means that euro is going to find support and is going to start working its way back up. So we may be seeing a sort of a trend-based move on the euro US dollar over the next couple of weeks as you start heading into a weaker dollar on the dollar index. And that, my friends, is going to wrap up this morning and this week's session. Hopefully everyone has had a fantastic time. Hopefully you guys have learned a little bit from this week, and of course positioned yourself to get ready for the next week. Remember, last week we made over 3,000 pips, and that was from trades from the previous week. So this week we've got a lot more positions in. So if you have a good recovery next week, we could go ahead and hit the exact same numbers and pick up a good amount of pips for the week, closing out next week. So get excited for next week. Take the weekend, chill back, relax, have a good weekend. Get ready for trading next week. We'll be starting on Monday. This is FX Big Dog. Have a blessed weekend, and once again, happy Valentine's Day for you. All right, this is FX Big Dog signing off.